Refinancing student loans. Is it worth it? That's a question more and more borrowers are asking as they face mounting debt and rising interest rates. If you're one of the millions dealing with student loans, you're probably looking for any opportunity to save money, lower your monthly payments, or pay off your debt faster. But before you make the leap into refinancing, it's essential to understand the full picture. In this video, we'll break down what refinancing is, how it works, who it's best for, and most importantly, whether or not it's the right move for you. Let's start with the basics. Student loan refinancing means replacing your existing loans with a new one, typically from a private lender. That new loan comes with a new interest rate, new terms, and a new monthly payment. The goal is to get a lower interest rate or better terms based on your current financial situation, which might have improved since you originally borrowed the money. When you refinance, the lender pays off your old loans and gives you a new one in its place. From that point on, you deal only with the private lender, not the federal government. But here's the catch. When you refinance federal student loans, they become private loans. That means you lose access to federal protections like income-driven repayment plans, loan forgiveness programs, and deferment or forbearance options. So, you need to weigh those benefits against the potential savings. So, when is refinancing worth it? Refinancing is usually a good option if you have stable income, a strong credit score, usually 650 or above, and you don't need the safety net that comes with federal loans. In other words, if you're confident in your ability to pay off the loan without the help of income-based plans or forgiveness options, you could save a lot of money through refinancing. Let's talk numbers. Say you owe $50,000 in student loans at an interest rate of 7%. Over 10 years, you'd pay nearly $20,000 in interest. If you qualify for a refinancing loan at 4%, your total interest drops to about $10,000. That's a savings of nearly $10,000 over the life of the loan. That sounds great, right? But the lower rate isn't guaranteed. Your credit score, debt-to-income ratio, and employment history all factor into the rate a lender offers you. And private lenders are selective. If your credit isn't great, or if you have an unstable job situation, you may not get an offer that's any better than what you already have. Another thing to keep in mind is that some private lenders offer variable interest rates. These start low, but they can rise over time, meaning your payments and the total amount you owe can increase unexpectedly. Fixed rates, on the other hand, stay the same for the life of the loan, giving you predictability. Now let's dive into the pros and cons of refinancing. On the plus side, refinancing can lead to a lower interest rate, lower monthly payments, and a shorter or longer repayment term depending on your goals. You might even save thousands in interest over the life of the loan. Some borrowers refinance to pay off their loans faster, while others use it to reduce their financial burden each month. You might also benefit from consolidating multiple loans into one, making it easier to manage your payments. One lender, one monthly payment. It's simpler and less stressful, but refinancing comes with serious trade-offs. By switching to a private lender, you lose access to federal repayment options like income-driven repayment plans, public service loan forgiveness, and the temporary pause on payments during national emergencies like the COVID-19 pandemic. If you refinance, those protections are gone for good. You'll also need to undergo a credit check, and if you don't meet the lender's requirements, you could be denied or offered a less-than-ideal rate. In some cases, you may need a co-signer, and that person will be legally responsible if you can't pay. Another point to consider. If you work in public service or for a nonprofit, you may qualify for loan forgiveness under the Public Service Loan Forgiveness Program. Refinancing makes you ineligible for that, even if you were only a few years away from qualifying. So, how do you know if refinancing is right for you? Here are 5 questions to ask yourself. Do you have a strong credit score and steady income? Are you comfortable giving up federal protections and benefits? Are you trying to lower your interest rate or monthly payment? Are you close to qualifying for loan forgiveness? Do you have private loans that you want to refinance for better terms? If you answered yes to the first three and no to the last two, refinancing might be a good option. Now, let's talk timing. When is the best time to refinance? The best time is when your credit score has improved, your income is stable, and interest rates are relatively low. Keep in mind that rates fluctuate based on market conditions, so it's worth checking multiple lenders to compare offers. Refinancing is also a good option if you have multiple loans and want to simplify your repayment. Just remember, you can refinance more than once. If you refinance now, and your financial situation improves later, you may qualify for an even better rate down the line. Let's touch on the process quickly. Refinancing usually involves a pre-qualification check, which lets you see estimated rates without impacting your credit score. If you like the offer, you fill out a full application. The lender will do a hard credit check, review your income and debt, and if approved, will pay off your old loans. Then you start making payments to your new lender. It typically takes 2 to 3 weeks from application to disbursement. So don't stop paying your old loans until the new lender confirms everything is complete. Now, a quick word about cosigners. If your credit or income isn't quite there yet, a cosigner can help you qualify for a better rate. But be cautious. If you miss payments, it affects both of your credit scores, and the cosigner is legally on the hook. And finally, a few tips if you're considering refinancing. First, shop around. Compare offers from multiple lenders. Banks, credit unions, and online lenders all have different rates and terms. Use pre-qualification tools when possible. Second, understand the terms. Look at the interest rate, whether it's fixed or variable, the repayment term, and any fees. Third, consider your long-term plans. Are you planning to go back to school? Switch jobs? Start a family? Make sure your loan fits your future, not just your current situation. So, is refinancing student loans worth it? For the right borrower, absolutely. It can save you money, simplify repayment, and help you reach your financial goals faster. But for others, especially those who need federal protections or are pursuing loan forgiveness, it might not be the best move. The key is understanding your own financial situation, goals, and what you're giving up in the process. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and share it with someone who might be considering refinancing their student loans.